Yes, guys, so welcome back to this new session. So, this session will be the most interesting session of all the sessions that we have discussed so far. The reason being, you're going to learn something which you've already learned in your intermediate level, but in a complete new form. I'm particularly talking about a standard which was earlier called as AS19 leases and now being talked about as IND AS 17 leases, but has been revised as IND AS 116 leases. So, why was this change necessary? This change was necessary because today leasing has become one of the most important aspects. Now, I'll tell you predominantly the reason which I got from one of the people who were actually framing the standard. He said that whenever these airplane operators or airline operators were actually presenting their financial statements, these airlines or these airplane operators were not even presenting in their financial statements the aeroplane as an asset. If I was asked on why was the aeroplane not presented as an asset, he was continuously saying that it was a lease which is not supposed to be recognized as an asset as per AS19 or your IND AS 17. Now, therefore, the operating income is being recognized and operating expenditure in the form of lease rentals are being recognized, but unfortunately, the standard is not letting them recognize the asset by itself. So this required something to be done as far as the standard is concerned. So the standard had to be revamped. They had to actually make sure that they're revising the entire standard. This revision of IND AS 17 has led to a new standard called as IND AS 116. This standard IND AS 116 has only come into effect from 1st of April 2019. 1st April 2019 was the only date on which this standard became applicable to enterprises in India which were covered under the roadmap of India. What about globally? Globally also, this standard is quite peculiar and has a similarity with IND AS 115. Your IND AS 115 or the IFRS 15 or your IND AS 116 or the IFRS 16, these two standards were combined or collaboratively issued by both the US GAAP as well as the IFRS. So that means this standard globally is applied and accepted across all countries and across all reporting platforms. So these standards, IND AS 115 and 116, has only come in the last 2 years. While IND AS 116 is the first standard or the most latest standard which came in on 1st April 2019, 115 started effect from 1st April 2018. The global application of the standard goes about 3 months earlier. That means they started application of the standard IND AS 116 from 1st January 2019 itself. So there was only a time gap of three months. That is because their financial year was more the calendar year. For us, the financial year starts from April and ends with March. That is a particular reason why they had to start applying the standard or application of the standard only starting from 1st April of 2019. Now, while we understand the standard, I want to tell you or warn you beforehand that this standard is predominantly a very large standard. It is not a standard that we can cover in a session or in 2 sessions and we can wind it up. Absolutely no. The standard has a much larger exercise of understanding, much larger exercise of understanding than any other standard. So definitely requires a much elaborate discussion as far as the standard is concerned. So by the time we complete the standard, you might lose a track of where we are, where did we start with, what were the contents of the standard. So that is the reason why I'm making an effort to divide the standard into particular parts or sections so that you can understand what the standard is and what is the flow of the standard. Guys, the flow of the standard is very important. Please get that into your head first. Then we can start discussion on the standard, starting with obviously the scope of the standard and the objective of the standard. Clear? So let's begin with our discussion on IND AS 116, which talks about leases. I'll have my heading as IND AS 116 talks about leases, very latest standard with effect from 1st April 2019. It is a direct replica of IFRS 16. Direct replica, no change whatsoever. IFRS 16 was applied with effect from 1st of January 2019. Any financial statements prepared on or after 1st April 2019 have to apply IFRS 16. Any financial statements in India drafted or started to commence on or after 1/4/2019 shall apply IND AS 116. Clear? So this is exactly what the standard says. Now this standard particularly replaced IND AS 17, which was available earlier. 17 is a much smaller standard, while IND AS 116 is a much larger standard which has actually replaced it. For an enterprise preparing its financial statements after 1st April 19. If you're preparing your financial statements after 1st April 2019, then this standard IND AS 116 shall apply. The earlier standard IND AS 17 is completely replaced. Guys, let me tell you, your IND AS 17, which was talking about leases earlier, is exactly similar to the AS 19 leases that we already had. Before the introduction of IND AS, we had AS 19, which was talking about leases. IFRS 17, more or less, in 99% is a true replica of such standard. There was no significant differences. But when I talk about IND AS 116, it comes across with a significant differences as far as your IFRS, your IND AS 17 or your AS 19 was concerned. So let's see what does the standard actually talk about, and let us split the flow of the standard. Well, I'm talking about the flow of the standard and how do I define the standard. First, I will start with, I'll put a heading as flow of the standard. Since the standard is large, I'll have to define what is a flow so that you understand where you are actually placed in the standard at the end of each session. So my flow of the standard should begin with, obviously, overview of the standard. This overview of the standard particularly includes three parts. First one, what is the objective of the standard? Second one, the scope of the standard. Third one, a peculiar one which will come into picture, is recognition exemption. Recognition exemption. The second one, or the second part of the flow of the standard, goes into something called as what is a lease. This is a very, very important understanding, guys, on what is a lease. For me to define what is a lease, I'll have to discuss about arrangements containing a lease, separation of lease and non-lease elements in a contract, and lastly I will discuss about combination of contracts. And lastly, I will discuss about combination of contracts. This is the second heading that I will discuss about. In this session, we might not be even able to cover what is lease as well. We can only cover to an extent, not completely. That is how much of discussion goes into this standard. Now guys, every standard talks about recognition and measurement. Where did you even write recognition and measurement? I'll write it now. Recognition and measurement, two very important parts of any standard. Again, under recognition and measurement, I'll have to discuss about both recognition in the books of lessee and also the recognition in the books of lessor. Then finally, I will talk about the last aspect, which is other matters. Under other matters, predominantly my discussion goes into two things. First one is sublease, leasing an asset which you already leased. Next one is sale and lease back. This is predominantly the flow of the standard. Starting with the overview of the standard, then I'll go into what is a lease and understanding whether an arrangement contains a lease or not. Then I will move into the concept of recognition and measurement. Trust me on this, that is more simple as far as your topic is concerned. All other topics will have something or the other which is quite confusing, but recognition and measurement is probably the most simple part of the standard. And finally, we'll move into other matters where I discuss about sublease and sale and lease back. And that will bring us to the end of the flow of the standard. So I can put it like this. I'll divide the standard into 4 parts. Now, this being the flow of the standard, let's start with first understanding what is the objective and the scope of the standard. The most important two things. Why do you think this standard has come into effect? What was the necessity of replacing IND AS 17? What was the problem with IND AS 17, which was earlier issued by IFRS and was also there in our IND AS? What was the reason? Why did we require a complete new standard altogether? Logic very simple. Logic is quite simple because I have a problem with identifying a lease in the arrangement, number one. Number two, I am talking about the accounting in the books of lessee. These are the two major changes which occurred because of the standard IND AS 116 replacing IND AS 17. Number one is identifying an arrangement which contains a lease. Number two, accounting in the books of lessor had to be changed. Identifying a contract or a part of a contract which contains a lease. That is the first objective. The second primary objective of introducing IND AS 116 is recognition of ROU asset. It basically means right of use asset. In the books of lessee. These are primarily the objective of the standard. Why did IND AS 116 come in? Is only addressing these two peculiar elements which are now discussed as per IND AS 116, never had as per IND AS 17. So primarily these are the objectives of why IND AS 116 was introduced and why did it actually replace your earlier standard called as IND AS 17. Similar objective we will also find, or improvements we will also find, when we discuss about IND AS 115, which replaced plenty of standards which we had earlier. We had IND AS 11 earlier, IND AS 18 earlier, all those were scrapped off after IND AS 115 revenue standard was actually introduced. So I'll talk about that later on, but as of now we are talking about the objective of introducing the standard IND AS 116. Clear? Now, as we progress from the objective of the standard, we will have to look at what is the scope of the standard. Now, what do you mean by the standard? The standard is particularly talking about thesis. Can you tell me what is a typical lease? What do you mean by a typical lease? A typical lease should start with a lessor or the owner of asset. A typical lease should start with a lessor or the owner of the asset, and the other party is the lessee. In this transaction, for the purpose of IND AS 116, we can also call this lessor as the seller and the lessee as my customer. In the context of IND AS 116, I can call the lessor as the seller and the lessee as my customer. The lessee receives from lessor a right to control the use of asset. The lessee is acquiring from the lessor a right to control the use of the asset. Similarly, as a consideration, he pays some periodic lease rentals. A consideration paid in the form of periodic lease rentals. They are paid by the lessee to the lessor as a consideration for receiving a right to control the use of the asset. Clear? This is what a typical lease actually looks like. Now that we understood what a typical lease looks like, what is the standard applicable to? The standard is predominantly applicable to any arrangement which contains a lease. It is applicable to any arrangement which contains a lease, except there are in particular 5 exclusions from the scope of the standard. So let's write down. IND AS 116 applies to all contracts which contain a lease. except for what are the exceptions from application of the standard. There are in particular about 5 exclusions like I told you. Let's begin with the first one. The first exclusion, that is part A, is lease for exploration of minerals, oils, natural gas, and other non-regenerative resources. Regenerative resources are those which get revised or renewed after the period. Non-regenerative means they don't come up after your extraction. These are particularly specified or mentioned into the contract or into the standard, that is IND AS 106. 106 talks about exploration and evaluation of mineral rights, and that standard particularly talks about the lease of these exploration of minerals, oils, natural gas and other regenerative resources. Therefore, I excluded from IND AS 116 since there is a specific standard of 106 which is dealing with it. The second exclusion is for lease of biological assets. Guys, this concept of what are biological assets, how are they different from bearer plants, we have already discussed as a part of IND AS 16. But remember, I will get back to this concept again when I discuss about IND AS 41. Another particular specific standard, so therefore excluded from the scope of IND AS 116. Third exclusion. A very typical point which we will come up in revenue standard is service concession agreements. This service concession agreements or arrangements, they are particularly discussed under IND AS 115. There is a separate appendix which deals with it. So I am not going to talk about here because I will deal it under IND AS 115, revenue from contracts with customers. Moving into part D. Licenses of intellectual properties. Granted by lessor. An intangible asset held for rental to others is covered under IND AS 38. I don't have to cover it under IND AS 116. Specifically dealt under IND AS 38, license of intellectual property granted by the lessor. So you can leave it here. The last point is very similar to point number D, but observe the difference, and there is a typical discussion that I will do in point number E because that happens to be the most important point of all the exclusions. Rights held by lessee. Under licensing arrangements. For motion picture film. video recordings, plays, patents, and copyrights. Let's only discuss about this aspect. How is it different from party? The licensing of intellectual property rights granted by the lessor. I am the lessor who is granting a right to you to use the intellectual properties. This is not discussed under IND AS 38. I wantedly wrote it under as IND AS 38 because I wanted you to rectify. The lessor is granting a right to the lessee. And now the lessor, if I granted the right to use the asset to the lessee, the lessor, for him, it is a revenue. It is an income earned in the form of rental to others. So it has to be covered under IND AS 115. But this is covered under IND AS 38. It is nothing but the similar licensing arrangements which are received by the lessee. Here the word lessor and the lessee are the most important. Let's say, for example, I am a producer of a movie. Okay? Because everyone understands movie language. So I'm talking about a movie language. Let's say I am a person who has actually produced a movie. I produced a mega budget movie at this point of time. Let's say the biggest star of of the film industry is working with me on this project. Obviously, I have the aura. I've created the project. I've displayed it to everyone, and everyone started clapping for my project. And now the movie is ready for release. I have given the right of release of the movie to Amazon or Netflix. I am lessor. I am the owner of the asset. I gave a right to use the asset or right to display the asset to either Amazon or Netflix. For me, the amount I received from Amazon and Netflix for the streaming of my movie is basically my revenue. My intention to produce the movie was basically to sell it to these streaming platforms and derive certain cash flows. Therefore, the amount which I received from this Amazon and Netflix should be considered as my revenue. It is my revenue from operations because that is the primary purpose for which the movie was actually produced. Think from the perspective of Amazon and Netflix. Amazon or Netflix received the right to display that particular movie or motion picture film from the producer. Now, for the company, Amazon Prime or your Netflix, this asset which is acquired for a particular period of time should be considered as an asset under IND AS 38. These Amazons and Netflix can recognize the motion picture right which they acquired from the producer under IND AS 38 as an intangible asset. Clear? Let me write down this point. I'm giving you an example. Producer of a motion picture film just for the case of it, let me take it as Netflix. Okay. This producer who owns the right or who owns the entire product of the motion picture film is transferring to Netflix right to use for a specified period. This Netflix, as a consideration for the right which they received, has paid some consideration. For the producer of the motion picture film, he will deal this standard as per this transaction as per Ind AS 115. For him, this is basically a revenue generated from his operations because that is his primary source of business. But for Netflix, I am saying it should be covered under Ind AS 38. Acquired an intangible asset through a legal right for a specified period of time covered under Ind AS 38. But I have a confusion. You said the right to use a specified asset for a specific period of time is also covered under leases. Yes. Then how are you saying that it is covered as per Ind AS 38? That is where I said this point becomes very interesting. This last point becomes the most important point and the most interesting point because there's always a battle in your head. Should Netflix treat this as an intangible asset under Ind AS 38 or should I recognize it under Ind AS 116 as leases? Your answer is right in both cases. Your answer is right in both cases. To Netflix, this can either be considered as an intangible asset under Ind AS 38 or you can consider this as a leased asset under Ind AS 116. Both your arguments are absolutely right. Acquisition of a right for an intangible asset is Ind AS 38, but the contract for lease of such right is Ind AS 116. Either way you can construct it, either of these standards can rule this time. Then why did you say it is excluded? Because I had to give you a very important point. I put a small asterisk and I am saying that for point number E only. The lessee, in our case it is the Netflix, may in the sense he is not required to apply Ind AS 116 to the lease of intangible asset the lessee may but is not required to apply Ind AS 116 to the lease of intangible asset instead of recognizing the transaction under Ind AS 38. This is a peculiar exclusion from scope. You are saying it is not always excluded. It is the option of the lessee, in this case Netflix, can choose either to recognize the asset that they received from the producer as an intangible asset under Ind AS 38 or can recognize it as a right of use asset under Ind AS 116. It is an option of the lessee. Lessee may but is not required to apply. So may apply. If they want, they can apply. If they don't want, they need not apply. Clear? So whenever you are talking about such kind of restrictions, now this is a very, very peculiar restriction which I am talking about for Netflix. So therefore, in that given example, if I talk about, therefore, Netflix can recognize the right to use motion picture film either as an intangible asset by applying my Ind AS 38, or Netflix can also recognize this intangible asset, or not and right of use asset, ROU asset, as per Ind AS 116. This is at the option of the lessee. Option is given to the lessee either to apply Ind AS 38 to such contracts or to apply Ind AS 116 to such contracts. There is no restriction on which standard to apply, but as such, this is a very peculiar nature of the transaction which occurs. That's why, though I wrote it as an exclusion from the scope, I put an asterisk. The right held by the lessee under licensing arrangements of motion picture films, video recordings, plays, patents, copyrights can either be recognized under Ind AS 38, but if the enterprise chooses to, if Netflix wants to apply Ind AS 116, it can apply Ind AS 116 instead of applying Ind AS 38. Clear? Got this concept? That's why I said this particular exclusion is very peculiar in nature. If you people are still writing, I'll just hide myself so that it will become clear to you. First 4 points are very simple. Lease for exploration of mineral oils, natural gas, and other regenerative resources, discussed particularly under a specific standard of Ind AS 106. Lease of biological assets, we will discuss it separately under Ind AS 41. Service concession agreements is a very new concept which has been introduced into Ind AS 115. Don't ask me what it is right now because it doesn't make sense to discuss at this point of time. The license of intellectual property is granted by the lessor. The lessor is nothing but the producer of the film, so for whom it is an operating income. Therefore, it should be covered under Ind AS 115. He is generating revenue by lease of those transactions. So by granting license to Netflix or Amazon, producer collects money. That money which he collected is a revenue which he got. That revenue should be recognized under contracts with customers under Ind AS 115. The last one was the most peculiar point which we had an elaborate discussion on. The rights held by the lessee under a licensing arrangement for a motion picture film, video recordings, plays, patents, and copyrights, you can either decide to recognize it as an intangible asset under Ind AS 38, or you can recognize it as an ROU asset under Ind AS 116. This I gave you with the help of an example. A producer of the motion picture film has granted a right to use the asset for a specified period to a streaming channel like Netflix or Amazon. Such producer is collecting revenue for his motion picture film from Netflix or Amazon. He will recognize it under Ind AS 115 as revenue from contract with customer. But Netflix, who obtained this right to display the motion picture film for a specified period of time in exchange of a consideration, he can choose to either apply Ind AS 38 or he can choose to apply Ind AS 116. LSE is may but is not required to apply Ind AS 116 to lease of intangible asset instead of recognizing the transaction under IND AS 38. Now that we are done with understanding the scope of the standard, exclusion from the scope of the standard, let's look at one more very interesting aspect. Why did I say very interesting? Because we did discuss about this aspect earlier. Look at this part which we have discussed under our flow. Under the flow of standard, we discussed about the objective. Yes. We discussed about the scope of the standard. Absolutely yes. But what is this recognition exemption which we are going to discuss now? What do you mean by a recognition exemption? That means a certain leases are exempted. They are exempted. They are not excluded from the scope. They are very much within the scope of the standard. They are lease transactions under IND AS 116. But they are exempted from recognition as per IND AS 116. Because IND AS 116 comes up with an elaborate discussion on recognition and measurement. He's saying these leases are small leases. These leases are immaterial leases. Please do not apply the complicated recognition criteria of IND AS 116 to such small petty leases. What are such leases where you don't have to apply IND AS 116? Now, this recognition exemption is also at the option of the lessee. The lessee who is a party to the lease, who is recognizing the lease under IND AS 116, can opt for this exemption. Now, why is this exemption given? Understand the essence of the exemption. The essence of the exemption is that 116 prescribed a very elaborate process, very complicated process of recognizing an asset which you have received as a lease. Lessee has to undergo and recognize an ROU asset for that. He is saying these leases are immaterial. These leases are small. Even though they fall within the scope of the standard, I don't expect the lessee to apply the recognition as per the standard IND AS 116. The lessee at his option can choose not to apply IND AS 116 recognition criteria for these leases because they are quite immaterial. They are quite immaterial, so lessee can choose to opt for the exemption. Now, what am I talking about? What are these aspects which I am talking about? Because this is very, very interesting concept that we are going to come across. You said immaterial. When do you think a lease becomes immaterial? When the item which is leased is significantly of a low value. It is a significantly a low valued item. Such items which are low in value are immaterial even if you have acquired it on lease. Let's say, for example, I did not want to actually buy a room purifier or the air purifier. Okay. So I went to a company like Daikin or Samsung. I said my office has about 300 employees. There's a high pollution levels which are going on in the cities. So I want them to breathe fresh air. So I want to basically buy your equipment for room purifier. He said, sir, the room purifier is 50,000 worth. I was not sure of how long the room purifier would actually be working well. Whether the employees would be able to take benefit of it or not. So I went and asked him, see, buying this equipment is not a big task for me. It is quite a low value item. But I still don't know whether my employees will like it or not. So what we'll do is, let's get into an agreement. Let us get into an agreement for just a period of 3 months. You install the equipment in my premises. Once you install it in my premises and I find that the employees are liking that service, I will make sure that I will buy a new equipment from you. Samsung accepted. They have come and placed these items in your books, in your premises. According to your logic of lease, you are acquiring a right to use the asset 100% correct. It is a lease as per IND AS 116, 100% right. But the value of the asset is 50,000. My company is Infosys. My company is Reliance. My company is Tata. Huge balance sheet values. Your 50,000 rupees of an asset is such immaterial or such low in its value that it doesn't even have to be understood or doesn't even have to be recognized as per Ind AS 116. That peculiar practice of recognizing an asset under Ind AS 116 by applying the entire standard may not be appropriate for such small value item. And if you look at the lease itself is for 3 months here. For 3 months, if you expect me to apply the entire standard Ind AS 116, you yourself are saying Ind AS 116 is quite a complex standard. Then for 3 months period, what will I apply the standard? That is why they have given an exemption to the enterprise. The enterprise can elect to apply the exemption for recognition of these items in my financial statements. You don't have to apply the recognition criteria under Ind AS 116 to certain leases if they fall under 2 criteria. One, short-term lease. Second one, lease of a low value item. Lease of a low value item or short-term lease. These are 2 aspects where you can say that an enterprise is eligible to opt for an exemption from recognition under Ind AS 116. If they want to, they can say, Ram, I don't want to apply your standard. Your standard is quite complicated to apply to such a small asset or such an asset which I am only leasing it for a very short period of time. So I will opt not to apply the recognition criteria under Ind AS 116. So let's look at that. Put a heading, recognition exemption. A lessee may elect not to apply the recognition criteria of Ind AS 116 to first one, short-term leases, or lease of low value item. The entity or the lessee may elect not to apply the recognition criteria under Ind AS 116 to short-term leases or to lease of low value items or low value assets because they are immaterial in nature. Let's first of all understand, what do you mean by a short-term lease? What does a short-term lease imply? What do you understand by this concept of short-term lease? And what is a lease of a low value item? Guys, the underlying asset of a lease, always every lease has an underlying asset. When do you call it as a low value asset? What do you mean by a short-term lease? Now, first let us bring up the concept of short-term lease, guys. When I talk about a short-term lease, a lease which at its inception, at the inception means at the beginning of the lease, has a period of or has a lease term of less than 12 months. At the inception of the lease or at the beginning of the lease term is less than 12 months. it should not be considered or it may be elected for exemption under IND AS 116. A lessee can choose not to apply the recognition criteria under IND AS 116 to such leases whose lease term is less than 12 months from the date on which the lease has commenced or the lease has incepted. Now, what is this short-term leases? What is this 12 months criteria which I am talking about? Let's say, for example, I'm talking about, I have leased out a building. The lease was given for a period of 11 months. However, the lease contained a clause saying that it can be extended for a period of another 11 months at the option of the lessee. The lessee has an option to extend the lease for another period of 11 months at the end of the first 11 months. Can I call it as a short-term lease? Initial period of lease is only 11 months. I have an option to extend the lease for another 11 months. Can I consider it as a short-term lease? Number one. Keep this question aside. I'll ask you a second question. Second question. I have a lease of an asset which on the balance sheet date has only further 3 months to run. On the balance sheet date, it only has another 3 months to run. Can I call it as a short-term lease? Because on the balance sheet date, it only has another 3 months to run. Can I call it as a short-term lease? Second question. Third question. Originally, the lease term was negotiated for a period of 3 years. Subsequently, the lessee and the lessor have mutually agreed to bring down the lease term to only 6 months after the commencement of the lease. Lease already commenced. Subsequently, the lessee and lessor are transacting or are contacting with each other, mutually agreeing to bring down the lease term to less than 12 months. Can I now classify it as a short-term lease? Third question. Fourth question. The lease is for a period of less than 12 months, but it conveys a right to the lessee. It gives a right to the lessee to acquire the leased asset at the end of the lease term. I am giving you this car on lease for a period of 11 months. At the end of 11 months, you have an option to purchase the car at a predetermined value. You have an option to buy the car or you can leave the car, your wish, at a predetermined value. Can I call this particular lease as a short-term lease and opt for exemption from recognition under IND AS 116? So many topics I discussed here. I said a short-term lease is a lease which on the date of commencement of the lease is for a period of less than 12 months. You said this very clearly, but I gave you 4 questions. Number 1. I have an option to extend the lease for another 11 months. Should I still classify it as a short-term lease? The lease is only for a period of less than 12 months, but the lessee has a right to purchase the leased asset at the end of lease term. Second one, can I classify it as a short-term lease? Number 3, on the balance sheet date, the further period of the lease is less than 12 months. Can I classify the lease as a short-term lease on the balance sheet date? Number 4, the lease was initially negotiated for a period of 3 years, but subsequently the lessee and lessor have mutually agreed to reduce the period of the lease term to less than 12 months. Can I now classify it as a short-term lease? 4 questions. All 4 answers are no. All 4 answers are no. You cannot classify any of those 4 leases as a short-term lease. So let us start writing down and understand what is a short-term lease, when you should not apply the exemption of short-term leases, what leases should not be considered as a short-term lease even if there is a change in the term. Clear? So let's discuss about all these things.